Welcome to MGAA Conversations, our new podcast channel where we'll be discussing with an exciting number of guests all things related and topical within the ever-growing MGA community. Good afternoon. Welcome to the latest episode of MGAA Conversations. Today, I'm delighted to welcome Mark McIlquham, CEO, Acrisure UK. Mark, welcome.
Hello, Michael. Really
Great
pleased to be here. Really looking forward to this.
Fantastic. Great to see you. Mark, so let's kick off for our listeners. Acrisure continues to grow at pace, so congratulations. Some of our listeners probably won't be fully aware of Acrisure UK and the components of your group. So I think this is a great opportunity for you to share that with us and our listeners.
I mean, Michael, probably 5 years ago, I hadn't heard of Acrisure either. So I'm not surprised that some of your listeners don't know us that well. We're the sixth biggest broker in the world now, control about $30 billion of premium. We're in 22 countries. And we've made about 1,000 acquisitions of insurance brokers globally. We're much more than an insurance broking group, though. We're very much a fintech. We've got verticals in wealth management, in cyber services. We've got a title business in the US. And our target market is very, very much the SME space. So we're an SME advisory firm looking to work with different verticals within Acrisure. So it's a very, very, very unique business, and we've got a fantastic culture that's very, very different to the other brokers that I've worked with, and that comes from the fact that we're 72% owned by our own staff, by our own management, and then we've got 3 external investors. We've got the Guggenheim family, a fund called BDT, which is a guy called Byron Trott. So the investors in that are people like Bill Gates, Warren Buffett, Prem Watsa, and then the Abu Dhabi Investment Authority own a few percent as well. So that all comes to 28%, and then it's 72% owned by management. And
is that staff sort of investment and obviously skin in the game? Is that something which has always been within the DNA of the Acrisure Group, or is it something?
It's completely the DNA of the group. So when we buy businesses, we always buy them with a mixture of cash and Acrisure stock. That stock creates a partnership, and then the idea is that we collaborate between our businesses and we cross sell, and that's really, really, really important because it is about that whole client experience of being able to do as much as possible for our clients using technology in as efficiently as we can. And Acrisure is very, very much about bringing the best of man and machine. So, we are spending, tens of millions of dollars a year on our tech. All of our data is in one place for all the risks that we place globally. And we've got the ability in the US to cross-sell using artificial intelligence. And, all of those capabilities are coming into Acrisure International, over the next year or so.
Fantastic. So distilling it down a little bit, Mark, so for our listeners, say, looking at the, obviously you're in charge of the UK bit. So perhaps share with us a little bit around the UK businesses.
Yeah, so when I joined, we had one MGA in the UK, a business that your listeners might remember as MGAM. And now that business is now called Acrisure UK MGA. And I'll come back to the MGA specifically, but that was all we had in the sort of retail space, as it were. We own a wholesale and reinsurance broker. So we bought a business called Beach & Associates in 2018. Beach & Associates consists of wholesale, reinsurance. It's got a facultative team. It's got an advisory team. So that's about 200 people. And then in that retail space, the bit that I'm responsible for, we've made 14 acquisitions in the UK. So we're about 1/3 of our premium is MGAs. So we've got two MGA platforms, a UK MGA and then SSR, which I'm sure a lot of your viewers, listeners are familiar with.
Yeah.
And then we've got about a dozen retail brokers.
So moving on from that, because obviously, it was well publicised that you bought the 10 network, rebranded it 11. So I think people will be interested in that rebrand. And again, can you sort of share with us around the strategy on the network and generally in terms of the listeners will be very interested in your view of UK networks, because there is sometimes a mixed view, some good, some bad. Yep. And so, just share with us in terms of that network strategy acquisition and then, how you see 11 developing.
I really like the network space. I think it's got such an important role to play in the evolution of the UK insurance sector. The barriers to entry to setting up your own FCA regulated broker are pretty high. A lot of regulatory risk for sole traders, small businesses. People tell me it takes about £200,000 to set up a broker now. The network space is a really, really, really good route to market, quick to get authorised because you don't need to be authorised, you need to be approved as an AR. And obviously that infrastructure's there that provides, the gateway for people to trade almost instantly. And so when the opportunity came up for us to partner with 10 as was 11 with Dawn and the team, it was something that I thought was a really, really good opportunity for Acrisure and Acrisure in the UK. And there are a number of reasons for that. Now, firstly, when I look at Acrisure, we are a little bit like a network in terms of, we buy the businesses and we provide central services to the businesses we've bought. And so actually us owning a network seemed like a real natural evolution of the business. And we've got networks in Eastern Europe and we've got a network in Spain as well. So it's a part of the industry that we really like. Then when I look at the UK, I thought that the network space needed a bit of a shake-up. I mean, there's some really, really good established competitors out there that are, delivering good service for their members. But for me, there is a lack of transparency in some of the models of our competitors. We wanted to create something that was very simple, very transparent, very easy for people to join. And therefore, the opportunity to buy, 10, now 11 was too good to refuse. We think there's a really good opportunity to build on the appointed rep network that they've already got. So there's about 80 ARs in there. We've probably signed up 10 new ARs since we bought the business. A mixture of leads being out there, talking to people, but also referrals that have come in from the Acrisure network, as it were, in terms of, from our wholesale colleagues and our reinsurance colleagues and our existing retail brokers. They're aware of people that wanted to start up. So that's worked really well. And then it's been, I think, very well publicised that we intend to launch a directly authorised proposition. And we've already got 3 directly authorised brokers in 11. We think there's a really good opportunity to scale that. We're going to launch that proposition before BIBA. So when everyone gets to BIBA, that Acrisure 11 directly authorised network proposition will be ready and waiting, and we'll be hoping to sign up lots of new members. The other reason that I was very attracted to the model is that a lot of the risks that go through a network are relatively small. And if you look at 11, I think the average premium size is about £4,000. We're here to talk about MGAs. A lot of that business does fit very nicely into MGAs. We think there's a really, really good opportunity for small brokers that are either part of our network or just part of an Acrisure ecosystem that are getting, not getting the service that they want from the composite insurers, haven't got agencies with the right insurers to use our MGAs. And therefore, the vision that I've got is that we will have an ecosystem of high quality brokers, some that we own, some that are a part of our network, and some that are third party brokers that have got the opportunity to use our MGAs.
Yeah. Do you see, when you look at the network landscape across the UK, you've already quite rightly sort of highlighted, there's some very good networks and whatever. Do you see it still the driver is around that regulatory and compliance sort of type support as an entry point, or do you think there's more differentiation now which brokers are sort of looking at in terms of when making a decision in terms of joining networks?
I think you're right. I think risk and compliance is part of it, and when we're talking to prospective members of the network, they do probably one of the first questions is, can you do my compliance for me? But for me, that's not the primary driver. There's a whole piece of being part of something bigger. I think that's really, really helpful. Obviously, a network has got more buying power than a broker on its own. And the network can invest in technology. I mean, we've partnered with Broker Insights from a data perspective. That's really key in terms of the insight that gives our network members. We've got a lot of initiatives in the tech space. So we've got a concept around a virtual broking desk that we're developing. And for me, the other really, really important thing about being in a network is access to markets. And I think a big differentiator for Acrisure and the Acrisure network is that when we're talking to insurers, MGAs, wholesalers, we're saying that we don't want you to differentiate between our own brokers and our network. If you want to work with us, you need to, trade with both, and they need to be, comparable deals. And, making sure that there's the right capabilities, the right capacity, the right term, the right TOBAs, the right markets for those network members is really, really key. And that's something that we are doing in the 11. 11's a great business, but we think it could be much, much better as part of Acrisure. So we are having, strategic conversations with carriers and MGAs and wholesalers. Obviously, we've got our own wholesalers, our own MGAs that will partner with the network. And we think that will, give superior placement opportunities and really important superior service to the network members.
Have you got confidence in terms of not necessarily the existing broker community, but the fact that we will see more and more brokers coming into the sort of the industry? Or do you feel, there is the bar, the 200,000? And, I'll give you one stat. We've obviously got members in the Republic of Ireland, and they mentioned to me that there hadn't been a new broker in the Republic of Ireland for nearly 24 months, which is extremely worrying.
It's a real shame, isn't it? Yeah.
Yeah. So I just wondered, in terms of through your lens, how you see, the health of the broker community, and is there the opportunity for new blood to come into and create their own brokers, or is the bar too high?
No, look, I think possibly the bar's too high for very small brokers or sole traders to become directly authorised themselves. But setting up as an AR, I mean, the barriers to entry are minimal. There were 4,000 brokers in the UK when I first started working with insurance brokers sort of 25, 30 years ago. And there are still 4,000 brokers in the UK now.
Yeah.
And look, the size, shape, demographics of those brokers have changed considerably over time. Obviously, there's been an enormous amount of consolidation over the last sort of 20 years. But actually, when you look at what we've got now, there might be more people doing it. And there obviously are a number of consolidator type businesses. And there are a lot of different models out there. But it's no real difference of, what Aon were doing 20 years ago to what Towergate were doing 20 years ago. And we've still got 4,000 brokers out there. And so, coming back to your point, networks are really, really important. My guess is there's probably between 1,500 and 2,000 brokers in networks in the UK. They are by nature smaller businesses. And a lot of them, have been trading a long time, but a lot of them are, startups, fledgling businesses. I mean, a number of the new members of 11 are startup brokers.
Right.
And for us, that's such an important part of UK Insurance PLC. The industry does need to kind of regenerate itself. And therefore, we want to encourage startups. We've talked to people about, some of the premium finance houses and banks, etc., about, whether there can be funds to help startups, whether there's ways of funding, the working capital in startups, because somebody who's got an established book of business and an established specialism, for them to leave a relatively highly paid job, with infrastructure and safety and set up on their own when they've got a mortgage or they might have school fees to pay. It's a big risk. So we've got to make that as easy as possible. And I think, as well as the funding piece, joining 11, there is that sort of access to Acrisure and the cross-selling opportunities. So yeah, I mean, from my perspective, it's really, really important that we have startups and that the cycle carries on. There are lots of startups, there's lots of opportunity. I hope with the unique model that 11's going to be and already is, that will encourage more people to leave where they are and be brave enough to start up. And and the important thing for us is we've got to make that as easy as possible for them.
Yeah, I really like your phrase, regenerate. I think that's really important. So
that's really key.
Yeah, and actually the fact that you say 4,000 brokers 20 years ago and there's still 4,000 now, so very resilient. I think that's
incredibly resilient.
That's a compliment. That's a compliment.
And brokers are entrepreneurs, Michael, and they they want to run their own businesses and be in charge of their own destiny, and networks enable them to do that.
No, excellent. So turning to MGAs, and as you've sort of shared, you've got MGA platforms sort of within the remit. So, we're, from an association perspective, we're growing in terms of members. So I see that the sector is extremely buoyant, but again, be really interested in terms of your view in terms of how you're seeing the MGA sector currently.
Look, we've got two phenomenal but very different MGA platforms in the UK. Now, as I say, I think most people will know Sutton Specialist Risks.
Yeah.
Incredibly eminent in the protection security sector, 40-year relationship with QBE. It's about 45 million of premium. I mean, their service, their capacity, their specialisms, are second to none. And it's an absolutely phenomenal business. And we were absolutely delighted to partner with them sort of 15 months ago when they joined Acrisure. And look, we're helping them to grow. We're looking at opportunities. They're looking at what else they can do. But it is a phenomenal business, and they pretty much trade with every broker in the UK because of the specialist nature of what they're doing. And for me, that they are exactly what an MGA, a specialist MGA should be. We've also invested a lot of time, effort, and money into what we now call Acrisure UK MGA, and that is a combination of a number of businesses. So the niche and the specialism of that MGA is that they're offering a one-stop shop to small brokers. We've got property, liability, and PI capabilities in that business. With there's a suite of up to 10 insurers across that whole piece, and it is all service driven, and it's so important. We're very, very competitive on price, but it's not about price. It's about service, and it's about access to markets. And again, it's a very, very, very unique MGA. Their run rate now is about 60 million. So you put the two businesses together, we're writing about 100 million of premium in the MGA space now in the UK, and our broking business is about 200 million. So that's just retail broking. So the bit of the business that I run is about 300 million of premium now. The idea or the reality is that anybody that's got an agency with SSR can use a UK MGA, which obviously includes the old MGAM business and the Modus businesses.
Right. So you're doing a blanket agency sort of.
Two routes to market from a UK MGA. I mentioned the Trimodus platform. That they're also on Acris as well. It's obviously very important for the Acris brokers out there. And as we know, about 50% of the brokers in the UK use Acris.
Could you see, Mark, that it's a common theme that you've got big insurers will put the smaller broker in a call center type approach, and that's a well-trodden path. And again, to respect to insurers, they're doing their absolute best to try and service that small broker. Do you ever see sort of a market landscape where actually MGAs will actually be probably servicing more of that smaller broker community than actually the mainstream insurers, just through the things you've articulated, such as speed of service, agility? Because that is a constant theme, which I'm sure I hear from the smaller broker community, that they cannot get an answer or a service delivery which meets their customers' needs.
When you look at the power of the big insurers and the volume that's going through those, I don't think we're ever going to become in a situation where more business goes through MGAs. But it's interesting because, when you look at MGAs in the loosest sense, you could say, well, what's the difference between an MGA, a facility, an affinity scheme, a binding authority? They are very, very similar. For me, the big differentiator for an MGA is that power to bind and to underwrite. I look at the phenomenal growth that we're getting in our MGAs. I mean, it is down to that service piece. So, but the insurers will react to that, and we can all see the surveys coming out of insurers, and they are trying to focus on service. And look, it's important for me running a broking group that service from insurers improves. But that's not really in my control. I mean, I can obviously give feedback on that and talk to them, and we've got partner insurers that we're working with. The service in our MGAs is in my control, and therefore, we are fastidious about, how quickly we respond to people. We're very, very clear if we can't do something, we tell people quickly. I like to think with Acrisure that, there's very, very little that we can't do for people, for brokers, for third-party brokers, because, we've got the wholesale capabilities, we've got the reinsurance capabilities, we've got facultative capabilities, we've got the MGAs, and we've got a fantastic suite of insurers that we work with. So that I personally don't think it'll replace them. I think that for the smaller brokers, and I look at the type of brokers that we're working with, they've probably got between sort of 3 and 10 members of staff. Our MGA is a fantastic proposition for them because it's so easy to use. Has got a suite of products, and look, they genuinely care and want to partner with people, and so I shouldn't say it's not rocket science, but it isn't really, because what the guys are doing in there is all about really good systems, partnering with the right insurers, partnering with the right brokers that join the club, and then offering them fantastic service. So I look at us as an MGA, and look, we are a relatively fledgling business, but we've got one very, very niche MGA. We've got a fantastic route to market through Trimodus, and then we've got a fantastic facility in a UK MGA that enables us to provide most services to small brokers.
Yeah, no, I don't disagree. I suppose my observation would be MGAs will have an increasing share of wallet. I think that's probably where I would sort of probably land. Actually, they won't replace insurers, but I think they'll have an increased share of wallet.
And look, the other thing that's really, really, really important to me and to Acrisure is that our MGAs are properly adding value. They've got to add value to customers, and obviously that's the primary focus, but they've got to add value to insurers as well. MGAs that lose their capacity, or capacity comes in and out and it's quite fluid. That isn't where any of us want to be. And when I'm talking to insurers about this is for us, these are partnerships. We're very privileged to get insurers capital and balance sheets to deployed to us, and we've got to respect that, and we've got to make sure that the loss ratios are right in our MGA. So that's fundamental, because anybody that burns capacity and doesn't treat the paper with respect, then it's a very short-term thing. And I'd like to think that MGAs are becoming much more long-term in their thinking. We certainly are.
I can't not have this podcast without asking about regulation. So you've obviously got broking.
Put me on the spot there.
You've got broking, underwriting. You also obviously have a network at 11, which you sort of kindly share with us. So, where are you currently around sort of, the regulatory environment and, intervention, etc.?
We are incredibly respectful about regulation. I mean, regulation's there for a reason, to protect consumers, and to keep everybody out of trouble, and it's absolutely fundamental. So we've invested heavily in risk and compliance in the UK. I've brought in a very established, well-known, high quality chief risk officer that sits across our businesses. We're investing in our monitoring, in our compliance team. We've got Keith Jackson, who used to be head of insurance at the FCA, as one of our independent non-executive directors. From our perspective, we want to do this right. And obviously, with my background in professional services and the fact that I advise businesses on regulation, it's really, really important for us that that we do the right thing and get this right. I mean, you called it a little bit at the start. I mean, one of the reasons I am passionate about this is I know that regulation is difficult for small brokers. I mean, I know that there's a understanding of the handbook. There's a cost of regulation. There are lots of advisors in the compliance space of varying quality. For us, it's really, really important that we get that aspect of the network right. And it's a really, really nice model for me that that through 11 we can provide those regulatory services and that oversight to our members. And obviously that includes client money, which is obviously one of the things that most worries people.
Correct.
So for us, I'm not saying it's a necessary evil. It's just necessary, right? And it's really important that that we get that right.
What just before I move on for that, what's your sense around the actual cost burden? Because if I speak to our insurer members who provide capital, and we know that insurers are quite open to say if we're deploying capital, the return on that business can sometimes be quite marginal, only the fact that commissions are higher and whatever. And the increasing cost of regulation effectively puts even more strain on stakeholders' margins. Clearly from a broking business, their sort of narrative quite right and quite strongly when you speak to Graham is that it is actually stifling innovation and the ability for brokers to work with their clients as much as they can do. So,
I'm not sure I agree with that.
Well, interested. So, let me pass the mic to you. Tell me your view on that.
Well, look, I think if you are a small standalone broker, there's no doubt that you're running regulatory risk because there's clearly economies of scale in being able to invest in a compliance infrastructure. And so, you've really got two options. You either outsource that to a compliance consultant or you join a network. For me, if someone is a member of a network, there's nothing there that's stopping people being innovative. I look at some of the really innovative stuff that our network members are doing, and and obviously we need to sign it off and understand it and approve it, etc. But that's the whole point of being in the network. We can help them with that. We can help them do it in a controlled way. We can help them with their markets, with their compliance, with their infrastructure, and obviously the infrastructure is there for them to use and to tap into. So I think if people are completely standalone and trying to do this on their own, one, I think they're mad, and two, I do think that probably the burden and the cost would stifle innovation. But if you're in a network, I don't think it does. I think for us, in the sort of size of business we are, and actually, although compliance costs are a lot in the context of what we're paying, wages and salaries and systems and buildings and everything else that it comes in running an insurance broker, it's still a relatively small part of the cost. Okay. I mean, it is. A lot of the time, the risk and compliance constraints, they're good for the business. They make you much more thoughtful about what you get involved in and what you don't. Consumer duty really makes you think about who's getting what in the distribution chain, what the value of people in the chain is, what commissions people are earning, whether they're the right customer outcomes. So I genuinely don't think regulations stifles anything from a negative perspective. Yeah, it stops people doing things they shouldn't do, and that's a good thing. And
that's the point.
And it makes people think twice about things that are marginal. And look, the more conduct risk there is in something, or the more complicated it is, the more it costs to launch because you need to be doubly certain around it. You need to put more compliance checks and the rest of it. I don't actually think that's a bad thing.
Okay, that's great. That's the whole point of these sort of MGA conversations. Okay, Mark. So you mentioned at the start when you shared about the group, obviously both globally as well as UK, very acquisitive. I think our listeners would be quite interested if you sort of just share in terms of how you're seeing, if we say UK mainly at the moment, in terms of how you're seeing the M&A sort of environment currently, and obviously there's talk about the cost of money and etc. So what are you seeing? Is it sort of calmed down? Is it overheating? What's your sense?
Look, our model's very different to pretty much everyone else's. So there are some businesses that are naturally attracted to our model and partnering and being remunerated for their business partly in AcriSure's stock, and there are others that, as I said before, want to go off to the beach and it doesn't work for them. I think the fact that we are quite different, means that people that genuinely fit our model are very interested to partner with us.
Yeah.
And that means that we've got no shortage of opportunities. The pipeline that we've got from pretty big brokers down to smaller brokers is very, very strong. Answer your question on the market. Look, there are lots of businesses still coming to market. There are lots of businesses still readying themselves for exit. So I don't think there's any shortage. I think at times people have got unrealistic expectations around what their businesses are worth in terms of if they ultimately want to kind of disappear off, as it were. But I don't think there's any shortage. Capital is different to what it was when I joined 2.5 years ago. I mean, if you look at where we were, you could probably borrow money at 4 or 5%. A couple of years ago, that 4 or 5 is now 8, 9, 10. Yeah. So the cost of capital is more expensive.
Yeah.
And so we are we're careful about what we pay for businesses. We pay what we think's very fair. For us, the model is all about what we can grow together and the upside in the businesses that we buy from being part of Acrisure. And I refer to our model as a free capital event model. Buy great businesses for what they're worth in a mixture of Acrisure stock and cash. And a very aligned earn-out where all the upside from the earn-out for all the stuff that we do for the businesses goes to the people that sold their business. It paid in a mixture of cash and stock. So that optionality is key. I suppose what does that mean for me is I think that, the expectations of people selling their businesses are probably the same as they were 2-3 years ago.
Yeah.
I don't think that everyone is paying the same amount as they were paying 2 or 3 years ago. But, there always seems to be someone that will buy every business. And, there's some very, very good businesses that we've looked at. And for whatever reason, we didn't think that they were worth, what we'd need to pay to get them. And we've seen, very, very sensible, accomplished competitors, pay those prices. And look, if you're looking for entry into a new product line or a new jurisdiction, or you're looking for, scale for whatever reason, things make different sense to different purchasers. So, we're very, very comfortable in what we're doing. But for us, people that join Acrisure, it's not just about, the money they get when they sell their business first time round. It's about what we create together and them sharing in that. And it's very, very different from, just getting a check and that's the end of it. We want people to realise the value in their businesses as part of Acrisure. We want to provide capital for people to make acquisitions. Something I'm particularly proud of is the fact that, most of the businesses that I've bought now in the UK are making acquisitions themselves. And then, as I say, the third part is ultimately what happens to Acrisure, and our stock is very valuable. There's real scarcity value in what we're creating. We're a genuine technology business with phenomenal tech. The businesses that use our Oris technology, are growing quicker than the ones that don't, and then we're profitable than the ones that don't. So the value of the technology and the power of that speaks for itself.
Absolutely. Okay, that's great. Absolutely fascinating. Really appreciate it. So, crystal ball time. If we were having this conversation in 12 months' time, what would you hope you'd be telling me around Acrisure UK in March 2025? There we go.
It'll be interesting to play this back, won't it? In March. Maybe
I will.
To come back and see where we are. Right. So, where do I hope we are? I mean, from a network perspective, I'd love for us to put on another, 10, 20 appointed reps into the business. And it would be great if we've got, started to get a critical mass of directly authorised businesses that are trusting us to be their network provider. From a broking perspective, a number of things that are really important for me. We are now increasingly using the brand Acrisure. If you look at in the US, we've taken 800 businesses and platformed them into 12 regional platforms and 7 specialist areas. So things like Acrisure Transportation, for example. We've got Acrisure Midwest. So there's 19 businesses in the US that I know are branded as Acrisure, working in a common way. For me, that is where we'll go in the UK. I think it's really, really important that we continue to promote Acrisure as an insurance brand and as a retail brand in the UK. And in the US, we've done lots of things like, I think everyone's aware we sponsor the Steelers Stadium. We're not going to, go to those lengths in the UK because, the UK is about 10% of Acrisure International, and Acrisure International is about, 15, 20% of Acrisure. So it's a relatively small part of Acrisure, but we are going to. I'm deliberately wearing an Acrisure gilet so that people can see Acrisure. And if we'd have been on Teams, I'd have had a big Acrisure logo behind me. And, Acrisure. I'm trying to promote Acrisure as much as possible. So what you will see is the businesses that haven't changed their name to Acrisure will co-brand as Acrisure in the coming months. That's important to us. Their existing brands are really, really important to us and them as well, though, because if you look at brands like Sutton Winston and Russell Scanlon, they're incredibly eminent in their local communities and in their specialisms. And I suppose I'm looking to sort of have my cake and eat it a little bit in terms of how we're looking at the branding. So crystal ball, Acrisure is I'd like to everyone that's kind of relatively knowledgeable and in the insurance sector to know who we are. That would be fantastic. How many acquisitions will we make? And everyone loves to try and get me to say, I mean, what I can say is we've got a couple that are in change of control at the moment. So they're pretty close, hopefully. We've got a pipeline of about another half a dozen that are in, sort of various sort of stages. So, looking forward, a year, and I'd like to think we've maybe done, 5, 10 more deals, something like that. And really importantly, deals into the businesses that we've bought. So, we now got the capability to buy smaller businesses because we've got the platform. We've got a fantastic platform in the south. We've got 3 great businesses in the Midlands, a couple of businesses in the north, fantastic business in Scotland. So, when you look at that, we've got the infrastructure to buy businesses into those businesses that, frankly, we didn't have before. A really small business that's on its own, that's a sort of orphan business, doesn't make any sense. No, so now, we are now able to buy smaller businesses. So, crystal ball around that, carry on making acquisitions with people that genuinely buy into Acrisure, like our model, want to partner with us. Yeah. And then the first space would be is the MGA or the MGAs. I'm excited about the network business. I'm excited about the broking business. I'm really excited about our MGAs. I just look at the traction that we've got in a UK MGA, and it only started trading just before Christmas, and I look at kind of the run rate, the trajectory they're getting, what they're doing, and it's phenomenal. And the thing that makes me most proud about that business is the feedback that we're getting from the broking community. When people say to me, "Oh, we were a bit skeptical about using that, your MGA," but when we did, wow, the service was brilliant. I love hearing that. So, when I look at where that business is, and I'd like to think that they're going to put another sort of 10, 20 million of premium on and grow. So, quite a long list of things.
Well, that's a long list. And what I can say, Mark, it's been absolutely fascinating to talk to you. Thank you very much for your insight. I know that our listeners will have a far greater depth and forensic knowledge of the Acrisure Group. So again, thank you very much for that. And I could say one thing over the next 12 months, given that last question, is that it will be exciting and it won't be boring. That's without a doubt. So thank you very much for your...
Michael, I've really enjoyed it. Thanks for inviting me. And let me come back in a year and you can test me where we've got to.
Absolutely. All the best, Mark. Take care.
Thank you.
Cheers. Bye. Many thanks for listening. We welcome all feedback, so please get in touch with your suggestions on topics and future guests. Please don't forget to subscribe on your chosen platform so that you don't miss out.